Welcome to the Forex Trading for Beginners series. My name is Nick and I'm a top author on TradingView. And in this series, we will be covering the most important concepts that you must know in order to trade the market consistently. Okay, so today's topic for this episode of Forex Trading for Beginners will be market structure. Now, how to identify market structure and obviously and most importantly, how to know when the structure is shifting from a bullish to a bearish structure or bearish to bullish. So first, we will be giving the definitions. I will then give you a quick trick that you can use to always identify structure correctly, and then I will show you how to identify when the structure is actually shifting, meaning when the trends are actually changing. So let's start by the definitions. Now, you all know the definition of an uptrend and a downtrend. Now, when the market is creating an uptrend, you will have a series of higher highs and higher lows, meaning that the market creates a high, which is this one here, then creates a low, then creates a higher high, then creates a higher low, so higher than the previous one. Then the market creates a higher high again, and again a higher low, higher than the previous low. And we all know the definition of a downtrend. In a downtrend, you have a series of lower lows and lower highs. The market creates a low, makes a retracement, creates a lower low, then creates a lower high, then creates another lower low, then creates another lower high, and then creates another lower low. This is the first low, the first high. This is the lower low, so lower than the previous low. And this is the lower high, so lower than the previous high. Again, lower low, and again, lower high. This is basically the definition of a downtrend and an uptrend. Now, inside of this higher highs and higher lows, or lower lows and lower highs, there is the structure of the market. When is structure created in the market? Structure is created in the market exactly when the market creates these swing points. The swing points that we have here are, for example, these highs and these lows. This is the structure that the market basically creates when it forms these trends. Now, try to stay with me when I explain this. We will then go on a real chart and obviously I will show you, but try to stay on this concept. So these swings in the market create the structure of the market. And there is one very important thing that you have to know when it comes to structure. When you have a structure level that is acting as resistance, if it is broken, that level then becomes support. And when you have a support area in the market that breaks, that support becomes resistance. It's one of the most important concepts when it comes to market structure, is that the support becomes resistance once it is broken, and the resistance becomes support once it is broken. Meaning that if you have a horizontal level of structure, which the market is rejecting multiple times, if the market breaks above the zone at that point, the previous resistance will become support at this area. And you need to see a candle close above the zone on the time frame on which you have this structure to have a confirmed break of structure. So not only the wick needs to be above the zone, the candle close needs to be above the zone. And that is a break of previous resistance, which at that point will be turned support. Same thing if we have the opposite scenario. If you have an area of support and the market breaks below the zone, at that point, that support will be turned resistance in the market. And after the retest, you expect that area to act as resistance. Why am I explaining this concept? Beside the fact that obviously is one of the most important concepts in trading, it is because by following this concept, we can understand how trends actually develop. Because when the market creates one of these swing points, this becomes an area of resistance. So once the market breaks above it, creating a higher high, at that point, that resistance is turned support. And after the break on the retest of that level, as we just said, this resistance is now support. So what you expect is for the market to reject that support and create a higher high. But at that point, you have another break of structure because this area here was the previous resistance, but now it is turned support. So previous resistance is again turned support. And what you expect is for the market again to reject the area to the upside and create another higher high. But at that point, you have another high, which is structure resistance, which once it is broken to the upside is again turned support. So at that point, if the market goes for a retest, you again expect the continuation to the upside. That is why when you have an uptrend, the market continues creating higher highs and higher lows. This is basically how this concept that I have just explained of previous resistance turn support is applied when you have an ideal uptrend. And the exact same situation applies also for a downtrend. When you have a downtrend, you have a low, the swing low, which is an area of support, which once the market breaks it to the downside is turned resistance. So you expect the market to retest the area and find resistance and create a lower low. But at that point, you have a new swing, which is the swing low, which is again previous support, which is now turned resistance. So again, you expect the market to go for a retest and reject this area as the new support turned resistance. So again, you expect a lower low, but at that point, again, you have a new swing low, which is this one here, which is the new previous support, turn resistance, from which, if the market will go for a retest, you expect continuation to the downside. And that is why basically when you have a downtrend, you expect always lower lows and lower highs, because that is how the structure of the market works. So creating a continued series of higher highs and higher lows, or lower lows and lower highs, depending if it is an uptrend or a downtrend. So this is basically the theoretical aspect of market structure. So this is how the continuations of the trends work. I will now show you also in this kind of analytical way how the reversals work, and then we will go on a real chart and I will show you some quick tips that you can use to identify the structure and how real trends work on real charts. Now, starting from the reversals, how does the market break structure to reverse? Now, in this specific case, what do we have? Now here we have the last structure area, which is this one here, right? The previous resistance, which is now turned support, that we have already identified. Now, when you see a level like this, what you expect, as you know, is for the market to go for the retest and respect this area as support. Now, what happens if the market does not respect this area as support? Now, in that case, you have a break of structure. The market breaks the structure to the downside. Now, since this was previous resistance, turn support, if the market fails to respect this area as support, it becomes again resistance. And since it becomes again resistance, you expect the market to go for a retest of this new support, turn resistance, for the market to create a rejection to the downside. And this is one of the most famous patterns in the market, which is the head and shoulders. Left shoulder, head, and right shoulder. Why does the market create head and shoulders patterns? Just a quick reminder, if you have any suggestions for further topics that you would like me to cover in the next videos, you can just leave a comment below. The market creates head and shoulders patterns because it fails to respect a previous resistance turn support, which is called a fake breakout. When you see a market that breaks above a previous resistance, at that point the area is supposed to be turned support, but if the market fails to respect it as support and breaks below the zone, at that point the area is turned again resistance, and as the market tests this new previous support to resistance, this is a retest of the fake breakout level from which you do expect the market to create a move to the downside. So this move here is a fake move, so a fake breakout. And this is how reversals happen in the market. The market fails to respect previous resistance, turn support. Now let's speak about reversals in the case of a downtrend. So from a downtrend to an uptrend. Now, in this case, the last level of previous support, now turn resistance, is this one here. So what you expect in a continuation of a downtrend is a retest of this previous support, turn resistance, and the continuation to the downside. However, if the market fails to respect this area as resistance and breaks back above the zone at that point, this previous support, turn resistance, will again be turned support. And what you expect is for the market to go for a retest of this area and create the continuation to the upside. In that case, again, this is one of the most famous patterns in the market, which is an inverted head and shoulders. And the market creates the continuation to the upside. And this, as we said in the case of an uptrend, is a fake breakout because it's not a real break of this previous support to resistance, because the market failed to respect this area as resistance and broke back above the zone. Now, another case of reversal patterns, and these are the only two that I will be covering in this video. There are many others, but just these are the two most common. So those are the ones that I want to cover in this video. The other reversal pattern that I want to speak about is double tops and double bottoms. Now, double tops and double bottoms happen when the market fails to break higher. So instead of creating a higher high, let's say the market creates this move, retracement, tries to go high. At this point, this is resistance, right? This area here is resistance. Until the market will break above this zone, this will be acting as resistance. Now, if the market fails to break above this zone, this remains a resistance area. And then the market basically melts to the downside without creating a higher high. At that point, you have a break of structure. Why you have a break of structure? Because the last supported zone that we have is this swing here, which is the support. But if the market breaks below this area, then this previous support will be turned resistance. And at that point, previous support turned resistance is a level at which you expect the market to go for a retest of before creating a move to the downside. But at that point, you have created a lower low and a lower high. So that is a shift from an uptrend to a downtrend. So as you can see, as in the case of a head and shoulders, a double top is a reversal pattern because the market shifts from an uptrend to a downtrend. Same thing can happen from a downtrend to an uptrend, because if the market, for example, after a retracement tries to continue lower but fails to break below the support that we have at this area, at that point, if the market breaks above this high, this was the resistance. But if the market breaks above this resistance, this previous resistance is now turned support here. And if the market goes for a retest of this previous resistance turned support, the market is likely to create a higher high. And in that case, you have a higher low and a higher high. So at that point, you have established an uptrend. So this is a shift from a downtrend to an uptrend. So it is basically a reversal pattern. So this is how market structure works when it comes to trends and reversals from trends. Now let's go on an actual chart, and I will show you a quick tip that you can use to always identify structure correctly and how to really identify a trend when it comes to the market. Now, there is a very simple tip that you can use to always be able to identify structure correctly. I get this question a lot. How can I be sure that I'm identifying structure correctly? Do I have to look all the way in the past to find the right structure areas, or can I just look at the most recent price action? Now, if you look at the most recent price action, is always better because the levels are fresh, okay? They're fresh levels in the market with a lot of liquidity in them. Now, a very quick tip. If you have a market that creates a move to the downside, okay, and you want to identify the structure, the simple thing that you have to check is where is the last time that the market went to the opposite side. Now, the last time that the market went to the opposite side, in this case, is exactly from this low to this high. So this is the previous support, which, now that the market has broken it to the downside, is turned resistance. And in fact, the market went, tested this new previous support to resistance, and created the continuation to the downside, basically establishing a downtrend. And that is the exact same thing that happened even this trading week. We had this move to the downside. So if you want to identify the structure, where is the last time that the market went to the opposite side? The market went to the opposite side exactly from this low to this high. So this is the previous support now turned resistance. And in fact, we did expect the market from here to create this move to the downside. And in fact, we actually capitalized with students on this move to the downside this trading week for a very nice risk to reward to the downside. So this is how basically you identify structure in actual market conditions. Always look for the last time that the market went to the opposite side. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education for all of you. Also, once you have mastered the basics of the market, you can also move to my live analysis series also here on YouTube. And then if you enjoy my content, I also have a mentorship program, which I will link in description. In the mentorship program, I teach you all the rules of my rule-based strategies, and then you can trade them live with me. Every single day, I give you a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. You find the link in description, and I will see you in my next video.